Today was a good day to short sell the market, and if you were a bottom picker, the market formed a new bottom today. So it's no escaping if you were interested in buying the stocks today. So let's look at what the market has in store for the rest of the week and what does this mean technically speaking for the fundamentals and the technicals for the market. So let's get started. So we'll start off with the S&P 500, and this is the 5-minute time frame just to give you an overall picture of how the market performed today. So as you can see, the market started off in a decline. So if you were a short seller on the S&P 500 or any of the stocks for that matter, today everything was tanking down. Today was a good opportunity to do so. So if you look at it, the market did hold its ground on the 20 period moving average line. That's the yellow line that you see on the screen. And it kept touching it and falling down again. It kept touching it and falling down again. And it did so through the entire day. And it's just right now as the market then resolves to show some upward momentum, it's going towards the 200 period moving average line. But this is again the 5-minute time frame. Let's look at the higher time frames to get a better perspective. So this is the 4-hour time frame, and I love to look at the 4-hour, daily, weekly as my primary time frames just to get different perspectives, because the market does respect the moving average lines on all of these time frames, and it may be for an intermittent amount of time, but it does respect it. So it's important to see if the market's kind of like stagnant at a particular time frame. Why is it doing so? So this is the 4-hour time frame. I'm just going to zoom in so you get a better look at it. Now the market, this is the previous few days, the market did hold its ground on the 50 period moving average line, but now it's decided to, it could not go over the 50 period moving average line. And this is something that I mentioned a couple days ago too. It was holding a lot of resistance in this particular zone. So it did not pass that particular resistance. It fell down, and the only way it could go down is touch close to the 4365 mark. So it hasn't really made its way there, but it's picked up close to the previous support, which is not really a real support in my opinion. The 4365 is a closer support that it could possibly head towards. So what happened was that the market decided to go down. Now this is just after post market, and this is the after the market closes at 4 p.m. Eastern Standard Time. It's decided to just rally up a little bit, but this is a premature rally. I would not hold anything towards it to say this is like another boom in the market or so. So the market's been constantly down. It is holding ground here. I would pay close attention to the 4365 mark. If it breaks down below it, that could possibly mean the market's heading lower, and it will then find a new ground around the 4278 mark, and that's low. So hopefully we do not head there, but let's look at the daily time frame and see. If you remember the previous few iterations of these videos, we talked about the 200 period moving average, and this is a daily time frame, and a lot of the markets do respect the 200 period moving average, especially on the daily time frame, and it's trying to hover around that, and it did break its ground today and made a new low. So that's a bad sign in terms of the momentum that the market has. How much of a rally can we expect from the market? So that's some bad news. I wouldn't pay attention to the aftermarket rally that we're seeing right now, and this is just because the futures markets don't really close. They close for maybe an hour or so every day between 4:30 and 5:15 ish. So this is just people that are still trading, or from other countries that are still trading right now, and they're trying to close their short positions. That's basically what it is right now. So where the market's headed is around the 300 mark, and that's like the next particular zone that we could expect. I would have liked if the market did not close below this and was kind of like around this particular support line. That's a 4393, but it's bad news if it breaks below it. Now there's always the sign of a fake out. What it means by that is that the market will attempt to break a particular resistance line, and then it'll bounce back, or break a previous support line and then bounce back out of it. So it's interesting to know how the market would react from this. So if I was to summarize what I would suggest that you could possibly do, it's a really choppy market. I would advise you to not take any long-term positions right now because it's too volatile. The market's gone up a couple days, it's gone down another day, and whatever rally, or if you had to take a buy position here, you're wiped out. You can't really make any of your profits back again. So it's more of a very short-term time frame that you could use for trading, and it's no longer investing at this stage. You could probably pick bottoms and like hope that you've picked it at the right time. But at this particular instant, I would say just wait for more stability in the market. If Ukraine gets worse, the markets will tank a lot more. So just keep that in mind while you decide either to buy or hold or sell right now. In terms of selling, I don't think maybe if the market breaks down below the 4375, yes, you could short sell all the way down till the 4315. So maybe you get around like 50 points if that's your intention. So but be cautious with whatever approach you take. If you're buying or selling, don't go all in. Start with small quantities and then scale up if you see the market trending in that direction. And as always, we'll also look at the weekly charts just to see a better, broader perspective. So this is for the investors that are looking to trade the market long term and keep it for a few years. I would say if you're an investor, this is a good time to buy for a long-term investment. The market won't stay at this value for a year or 2 years. So you're in good hands. This is a good value discount that you're getting. But at the same time, I would probably, so if you look at the market closely, it has been trending closer to the bottom. So that's the 4395. And that's the reason why the market stopped. It's paused right now because that's the lowest that it has gone on the weekly time frame. And as I always say, the weekly trumps the daily and the 4 hours. So the 4 hours is just to get an intraday or an intra-week perspective if you're looking at the daily time frame. But if the weekly has a strong support line at the 4387 or 4388 mark, the market will respect that. And that's why you see the market trending about that right now. So I would say just wait and see if the market is heading lower. And if it does, it's going to come closer to the 4336 mark because that's the strong support line on the 50 period moving average line. So that's just a perspective on the S&P 500. Now let's see which stocks actually did the worst today and which did pretty well. So let's look into some few stocks picks for the day. One of the biggest stocks that fell today was Tesla with almost a 5.09% drop. And if you look at Tesla, and this is the daily time frame that I have in front of you, you could see that Tesla is in a range right now. So I would advise you just stay away or just hold whatever you are trying to do with Tesla because there is a possibility that it could probably hover around the 200 period moving average mark and wait for direction. So look at the weekly time frame and see how the market's trending. So you can see it's been trending or in a range for about 3 weeks now. And this is the 4th week that is still in the same range. So I would say just wait, let Tesla tell you where it's heading. If it's heading upwards, that could possibly be a good time to get in. Or if it trends around the 50 period moving average, that's a good discount buy. And you would most likely turn that purchase into a profit and keep your stop loss below the 50 period moving average. So just, I would say, keep an eye on how it's trending. If it ever touches the 50 period moving average, you could take a buy with, the risk versus reward is more reward than risk. So keep that in mind while you trade Tesla and look at it for this week or maybe next. The other stock that did pretty bad today was Nvidia with a 7% decline. Now, it did surpass the expectations of its earnings and it had really good numbers in terms of earning results. But overall, Nvidia is again in a range right now. It went up almost 9% a couple days ago. Tried to go up again the next day as well, but then tanked down today. And that's expected because it was more of reacting to the earnings results that came out. Now, if you look at the weekly chart, and that's what I would advise all of you to look at, is you would notice that the Nvidia has been trailing close to the 50 period moving average line. So I'll pay close attention to, does it break out of the 20 period moving average line and move higher? If it does so, I would advise you to go ahead and probably take a buy position with a stop loss just below the 20 period moving average line. Another good buying opportunity is around the 50 period moving average line, because Nvidia is a good stock to hold. Like, it's not doing poorly, the results are not bad, and there's a lot of growth opportunities in it as well. So a good place to buy is around the 50 period moving average line if it trends lower there. But keep an eye on it. It's a good stock in my opinion, and I would always recommend getting Nvidia at whatever price it's trading at. Better the better the discount, the better. But no rule. No one's telling you not to step in. So as you can see, today was a pretty down day. There was nothing that was in green except for Walmart, and Walmart again was a 4%, but that's just like a rare speck in like a sea of red. There's also Cisco that had good results today at 2.8% of a gain. But overall, technology was the biggest downer, with almost everything in the technology sector tanking. Adobe with a 4% decline, Oracle with a 4% decline, Synopsys with another 4% decline. So nothing really good or positive to talk about. Let's look at the other sectors. Maybe let's look at oil, let's look at gold, and see, is there another opportunity that you could put your money in while we see a sea of red taking over the stock market. So these are the light crude oil futures, and just to give you another perspective of like how the other commodities are trading and not just the stock market. So as you can see, the oil futures have the rally that we have seen from like all the way from 21st of December has taken a breather. So we've seen a small decline in oil prices, touched the 20 period moving average line, and it's around that area right now. So time will tell, like if it does continue its rally, or it may just like decline towards a 50 period moving average line. We'll look at the weekly for a second. So if I look at the weekly, and again, the past would give you a better prediction of how the future is. You can notice here that if it ever is above the 50 period moving average line, there is a greater tendency that it may touch the 50 period moving average line again. So you've seen it come close to it a couple times. Now, if you look at this year, it did have a strong rally up, but it's so high away from the 20 period moving average or the 10 period moving average line. There is a tendency, or I do predict or expect that there would be a few more declines as it touches closer to a more less inflated level that it is on right now. So some more declines to come in oil. So keep an eye on that. That could possibly mean something to do with Ukraine. But those are just fundamentals, and fundamentals may change day by day on how the market reacts to news about the Ukraine conflict, and that would also play a big role in like the reaction to oil, because oil is so closely linked to Russia and whatever's happening there. Let's look at gold now and see how gold's performing. Gold, on the other hand, had the biggest rally of the day, and if you look at the previous, so this is a daily time frame for the gold futures, and as you can see, it did fall down a couple days ago, and this is when the market rose up a lot. Like it went up like 1.5%, and gold tanked down. And gold and the stock markets are the biggest enemies, you could call it that way. They never get along, and like if one goes up, the other goes down. And if I was to put in literal terms on why that happens, is the investors or the traders in the market need to invest their money in some commodity. They don't like to keep the money just idle in the bank or in their trading account. So if the stock market's falling and they are not able to put in like big amounts of money, they put it into gold or they put it into other commodities. So that's why it's good to have a good perspective of like, what are the other commodities doing? So if the stock market's falling, there's something has to rise. So that's where we could like have a better picture of how the other commodities are performing. So gold did extremely well today, but do keep an eye on, this can't be a forever rally, because it's already like highly like inflated, or it's gone up a lot since closer to its like any of the moving average line. So there is a possibility that it may consolidate soon, because these kind of rallies don't last forever. But if the stock market tanks more and it goes down to like the 4300s or the 4200s, gold would have the tendency to go up. and that's just because like people need to invest their money somewhere. Now it's interesting to know like how Bitcoin's performing, because again, Bitcoin was supposed to be a safe haven for the people that don't want to invest in the stock market. So let's look at that next and see what's in store. So this is Bitcoin on the daily time frame, and Bitcoin actually did not have a very bad day. It's fairly it did drop, but not to the extent that we would expect. Like the S&P 500 dropped. So it's kind of having an okayish day, not the worst. But again, like if you look at Bitcoin here, it has been holding the 50-period moving average line. And what I do feel is that now, because Bitcoin's getting more mainstream, all these niche investors that never knew technical analysis have now, we've also got a lot of these generic traders that have actually come in and stepped into trade Bitcoin more now. So what's that caused is that the market trends will kind of like coincide with each other, and what that would indicate is that the markets would now respect the moving average lines, respect the supports and resistances that come with it, because that's how traders trade. So that's where we have seen it as an influence on the Bitcoin stock exchange as well. And that's why the Bitcoin's been respecting the 50-period moving average line, because otherwise, why would it actually like just hold ground here? Why would it fall when the stock market falls? So something to think about. Why is it doing so? But yeah, like Bitcoin's like holding its ground. An important level to keep in mind is the 35,000 level for Bitcoin. And the reason I say that is that was the new low that it did create. So if it breaks down below that, that could be a danger sign for the Bitcoin in particular. So that's it for today. I hope you had a synopsis of like how the market's trending, what's performing well, what performed badly. Basically, today was a bloodbath. Everything was red, especially technology, with almost like an average of 3% down across the board. So hopefully, like the market is able to hold its ground on certain key levels and continue its trend upwards. If not, get ready to have your short sells in order so that you could short the market and gain some profits while it heads down too. So with that, thank you and hope you have a good rest of the day. Stay tuned for my next video as I keep you updated on how the markets perform.